people don't like to go to banks. Banks have to understand they provide an essential service, perhaps don't really look forward to using, and that needs to be fast and error-free at any point in time. If we don't exceed their expectations, they will go. Then we only have ourselves to blame.
The view we've always grown up with, stay with the big banks. That's where you put the money. Your money stays safe. Do we start seeing a seismic shift in trust?
Ensuring acceptable levels of safety, if you want. That, I think, will continue to be a factor. No, that has to be a factor in decision making. It may be the bank that provides the second or the third best possible interest on your deposit, but where your money is safer. The only area where you can be competitive is customer experience, and the bank that gets that right most of the time, most often, is the bank that's going to win.
Ladies and gentlemen, welcome to today's episode of Couchonomics with Arjun. Joining me on the couch for the second time, although thankfully it's a new couch, is Dr. Bernd van Linder, who is the CEO of Commercial Bank of Dubai, or also known as CBD. So, Dr. Bernd, welcome back to the couch.
Thank you. I'm very happy and honored to be back here.
You were, I think, one of the first few guests we had on the show about 4 years ago. It was very kind of you to make time then. And I'm thankful that you took out time from your busy schedule to come back on the couch.
I enjoyed it 4 years ago. I'm sure I'm going to enjoy it again today.
So the good thing is, 4 years, a lot has changed. Some might argue not as much, right? So I thought maybe the best question to start with is to take your view on the state of banking in the UAE, possibly the wider region, and even globally if you want to have a perspective. But more from a vein in terms of what has changed, what do you think could have changed and hasn't changed fast enough? And I guess the last part of the question is, has banking kept its pace with the level of change the customers have actually wanted?
I think you're right. A lot has changed. When we were last talking here 4 years ago, I think it was sort of COVID was over, but we were still getting used to all the changes that COVID had brought to us. We were talking at the time about customers expecting to deal with us digitally. Yeah, no need to visit a branch. We were surprised by how mobile had taken off, how the number of digital transactions had taken off, because it was exponential growth. I think everything that we were pleasantly surprised by at that time has become completely standard. Because today, if you don't have a fantastic app, mobile app that offers all the functionality and all the services that customers expect, you're actually not a bank. If you don't have processes digitized to the extent that you're able to deal real time with most of the customers' requests, you're not a bank. If you don't have your call center set up in such a way that customers will get a first call resolution on whatever, 90 to 95% of their calls, you're not a bank. So I think everything we thought at that time was special and sort of look at all the things that COVID made us do now has become completely standard and is business as usual in banking today. Have banks kept up with changing customer expectations? Look, I think when you look at the UAE, when you look at the region, banks are very strong. Banks are financially very strong. We're all very well capitalized. We're very liquid. We do a fantastic amount of business. Growth figures that you see for the banking sector in the UAE and in Saudi, you don't see anywhere else in the world. You don't see them. Banks are doing extremely well. Banks also keep each other sharp. When you look at the competition in UAE, we're bank number 7 out of 50 plus licensed banks. There is massive competition between those banks, so that helps for us to become better at meeting customer expectations. But you're right, the only thing that really counts, the only area where you can be competitive is customer experience. What does the customer experience when he or she interacts with the bank? And there our benchmark are essentially the other companies, the non-bank companies. Customer expects us to provide the same level of instant service as an Amazon or a Noon does. Customer expects the interaction with us to look like whatever they see on their Apple interaction, right? On the iStore. And really, this level of service is the level that they expect from banks. Are we there yet? We've come a very long way. We can always become better as banks overall, but I think all of the banks agree that this is the standard that we need to strive for.
No, I totally agree with you. I think what the beauty of that answer is you've given me 4 or 5 sort of sub questions which I want to dive into. Let's just start with the first and most obvious one, right? As you said, banks do phenomenally well, right? Typically, when things are going well, there isn't, and I use the word typically, there isn't a burning platform for change, right? So what drives banks, and including banks like you or CEOs like you, to sort of wake up in the morning and say, no, we do need to continue changing? Yes, customer expectation is there, but let's be honest, customers aren't universally dissatisfied. They might not be superbly happy, but nobody's out there with banners outside your banks and saying, where's our money? So how do you create that I don't like the word burning platform, but that need for change?
I agree. Customers are not universally unhappy, and in fact, when you look at the data, customers are actually quite happy. UAE is scoring very well. I think we're still top quartile in the world when it comes to satisfaction with banking services among customers. But don't forget, Arjun, in this market, customers have a choice. There are 50 plus licensed banks to choose from. Yeah, all of those banks. Almost all of those banks have made it very easy to start a relationship with them. Yeah, you and I can open a bank account real time with almost any of those banks. So customers have a choice. If we don't meet their expectations, if we don't exceed their expectations, they will go. They can go and they will go. And it's actually quite easy to do that. So there's no need for a burning platform. Our customers force all of us to step up to the next level. And their expectations are not our parents' expectations for what a bank's supposed to do. Their expectations are what Amazon and Noon is providing them. And providing them that level of real-time service, that level of transparency as well, where we are in dealing with their service request, that is what provides the driver for all of the banks to become better in this space.
No, good point, sir, good point. So let's shift to the next question, which is, you mentioned it now twice, that you look at, if not necessarily competition, but definitely inspiration from the likes of the non-FIs, the tech players, right? So we'll split this question. I'll come to the tech part, which everyone wants to talk about. But there's a human side to all of this too, right? Bankers love being bankers. I have spent most of my life advising bankers, so I personally think maybe I'm 1/4 banker myself by now, right? What have you had to do in terms of retraining the brain, retraining the mind, retraining the body of the cohort that you've had in the bank, right, who see themselves as bankers but are now having to compete on metrics and needs which are very non-banking-like?
Bankers love being bankers. Not sure if it's universally true, but I like the way you phrase it. I definitely love being a banker. I've been that for almost all of my career, and I love it. But one of the things I've kept on saying, I said it at my previous bank 15 years ago, and I say it still today, people don't like to go to banks. Yeah, I've in, how long have I been a banker now? Almost 30 years. I've never met a client who said, yes, I'm going to go to a bank tomorrow. Yeah, I'm going to visit my bank. People come to a bank because they need something. And the mindset of staff, and you're right, park technology for a second, but the mindset of all of our colleagues has to be, we're going to make this experience as easy, as frictionless, as fast as we can make it for the customer. And by the way, we're not going to make any mistake in the interaction the customer has with us. That has always been the case. That was the case 15 years ago. I think it has become easier to live up to that promise given how technology has developed in the meantime. But banks have to understand they provide an essential service that people perhaps don't really look forward to using. That's extremely important to people, and that needs to be fast and error-free at any point in time. So that, I think that's point number one. All of the people in the bank, I hope all of my colleagues in the bank understand that this is what needs to happen at any point in time. And we keep on focusing on that. It's not about technology. You're absolutely right. It's about getting the processes right that will allow you to offer the best possible experience to our customers. And that's what people need to understand. And then sort of, in order for that to happen these days, people need to understand what technology can do. So what we have done is everybody in the bank has access to a large set of courses of training in AI at different levels, because people have different needs, but everybody in the bank should understand AI. I forgot who said it, but I think he was absolutely right. It's people who know how to use AI will outcompete those who will not. It's not AI competing with humans, but it's humans who understand AI competing with other humans. So that's one. Our digital accelerator to make sure that people have a digital mindset. It's crucial, again, because digital processes are fundamentally different than the processes that we had before. It's not just replacing a piece of paper by a scan, which we do way too often. It's really redesigning these processes from the ground up and getting people to understand that. And I think the last point is always think with the customer in mind. You, me, all of my colleagues at the bank, we are customers of a bank as well. We're customers of other companies. How would you want to be treated by your bank? And if you keep that in mind, then typically you very quickly realize where the flaws are, where the friction is in your processes. You change those and you improve the experience. And that's what it is.
That's what it is. And so my follow-through question, and I think this is brilliant, because you just said you, me, and others are we customers, right? So here's the question, right? CBD has actually been very impressive over the last few years. Congratulations to you. You know, you guys have grown tremendously under your leadership. 50 competitors. There's only a finite number of playbooks. How do you differentiate?
It's even worse than you say, to be honest. It's 50 banks, and it's purely commoditized products. Because the typical products, especially for retail customers like you and me, typical products are fully commoditized. There's no product differentiation anymore. Okay, then if you go back to the old marketing lessons, competing on cost is difficult, and it's also typically not something that will give you sustainable competitive advantage. The only way to compete is actually on customer experience. And the bank that gets that right, most of the time, most often, is the bank that's going to win. I'm absolutely convinced, and that's why we keep on focusing, the bank as a whole, to optimize the experience we deliver to our customers. There is really no other way.
Okay, so let me take an experience view, right? So it's very interesting. I've been lucky enough, I think you were the 4th or 5th episode. We've done about 160, and a number of banking CEOs have come here, both from banks which have been around for a long time, including what we call now digital banks and neobanks. And a very interesting, if I may say, trend is emerging that a number of the digital banks are saying we're digital first. And when I probed a few of them, they said, hey, digital first means wherever we need to have physical presence, we'll do that. Because at the end of the day, this is about serving the customer and meeting the customer need, not being obsessive about digital, right? Which I totally appreciate, right? Because it's fine. And so hence, branches might have had a second lease of life, right? Maybe in a different form and shape. What's your perspective, sir, who has traditionally come from if I may say, a branch-led model, both for not just retail banking, but also corporate banks, and corporate customers also like to come to a destination to engage, SMEs and so on and so forth. What's your view in terms of the role of branches for the foreseeable future? I'm not bothered about what happens in 20 years, because at least I won't be working. So what's your view about branches in the foreseeable future, specifically in the context of the region we live in?
When we spoke 4 years ago, I'm sure I mentioned we're a bank that wants to be default digital, mobile first. That hasn't changed. We want to be default digital, mobile first, which means everything we offer, every possible service we can offer, we want to offer in a digital way, and make sure that it all works on mobile. That's essentially what it is. But there is a role for branches. You're absolutely right. For more complex products that require advisory, there's still a large group of clients that want to talk to another human explaining it to them. When you talk about corporate clients or SME clients, they want to talk to their relationship managers. Yeah, they want to understand there may be certain issues they want to discuss. I believe there is a role for a branch. I fully understand why these digital banks say we're digital first. I think for a long time, Amazon was fully digital until they started to open stores left, right, and center. And there is added value. You don't need a lot anymore. You don't need a completely country-covering network, because people should only come to a branch for something special. And that doesn't, by definition, it's special, so that doesn't happen every day. But once it happens, people will need and will want to have a location that they can go to. So from my perspective, for the next 5 years, for the next 10 years, I think you may still be working 20 years from now, but even for the next 20 years, I do foresee a very important role for branches.
Yeah, and I totally agree with you. And I think they'll morph into something else, as you said correctly. I think they'll morph for either people with complex products or people who have needs, right? And I think we shouldn't forget that we're here to serve the entire nation, or entire cohort of customers.
No, and you're right. There should be no need for you to come to a branch to open a deposit, to open a current account, to get a credit card. There should be absolutely no need. If you want to get a mortgage and you're it's a standardized product, again, we should be able to offer that to you in almost completely digital fashion. Yeah, there will still at the end be some need to meet physically, but we should get very close. But there may be investment products, there may be certain advisory products where you really want to talk to a relationship manager or to a specialist. And that will be best be done through a branch. So that I think you're right. Special products, special needs. Branches will be there.
Branches will be in the mix. Let me sort of flick across a little bit about little bit to technology, and please correct me if my assertions are wrong here. Right. So two parts to it. The first part to it is technology within banks. Traditionally, if you go back 20 years, was sort of closed walled gardens, right? It was highly proprietary technology. You know, it interacted where it had to with the world outside, but it was largely sort of built in. We're now living in a world where technology, banks are largely orchestrators, if I may call, who sit on top of a stack, and a public stack, whether that could be, identity, whether that's data, whether that's compliance, whether that's interacting with central bank and government systems, right? How hard has it been, in my view, to rewire the bank, right, while keeping the lights on, right, from moving from a completely closed-walled environment to what I call now semi-open, heading towards a much more open world, right? From a CEO's table, how hard has it been?
It's not been easy. And it's probably the area where the neobanks, the digital banks, had the biggest advantage. Starting from a clean sheet, greenfield operation, it was much easier for them to get that right from the start. We've done a good job in this. I think we still have the size to make it more manageable for us. But if you're one of these massive universal banks with a 100+ year history that we have in the Netherlands or in the UK, where till today still many processes are being run on mainframes, it's not easy. It's actually not easy to get this integration done. On the other hand, it's the only way. Because many of these services in a way are non-competitive. KYC is not competitive, right? My KYC should be the same as it is for every other bank in the UAE, because we have a very strong and very capable regulator who told us what we need to do in this space. Why not share it? Why not have a shared functionality, a shared service to do this kind of things? Because ultimately, it will be much better for the customer. You and I are a customer. If we do our KYC once and we know that it's up to date and that every bank can use it, it will make it much easier for me to interact with many banks. All of these interactions with government, with other players, it's ultimately at the benefit of the customer. So it's not easy, but on the other hand, there's also no alternative. This needs to happen. It's the right way. I'm very happy we went down this path, and I think the progress that the banks have made is massive in this space.
Okay. That brings me to a question. I asked you this question because I went back and looked at the questions I'd asked you 4 years ago. And there was one question I posed. And at that time, we were at a very early stage of fintech evolution in this part of the world, right? And we had a few BNPL players who were creating a lot of noise. Obviously, payments there was. But there wasn't much else at that time, with all due respect, right? Things have changed. We have, 500 fintechs that operate across the region. We have a number of unicorns. I think there's some credible players. For me, what's very interesting is fintech has found its place in infrastructure, right? Rather than just a B2C play. But let me pose the same question to you. As you sit today leading a bank which has grown quite tremendously. And I know you have a track record of actually partnering with fintechs also. How do you see fintechs? Competition, so enemies, friends, i.e. people who are enabling you to accelerate that digital transformation. So rather than build it ourselves or go to what I call traditional providers, let's build with these fintechs, right? Or still a distraction. Where do you see fintechs from that context?
So we have no enemies. That I want to start with, right? Competition is something that makes us better. So to me, competition are friends as much as real friends.
Good point.
So no enemies in any case. I think they're both competition and friends. They're definitely much more than a distraction. Much more than a distraction. For banks that are able to make the right use or that are able to create the right partnerships with fintechs, they actually do add massive value. We have partnerships in the space of transaction monitoring on the compliance side. It's brilliant. We have partnerships in payments with one of the fintechs. It works extremely well. We joined a fintech sponsored by JP Morgan, which again increases customer experience when it comes to payments. It's fantastic. So as partners, fintechs are extremely important to banks and are much more important now than they were 4 years ago. I think the fintechs have become more mature, have sort of gotten a better understanding of what they need to do. And the combination of a fintech who understands optimizing customer experience with a bank that understands how to deal with trust, compliance, and regulation is actually, it's a brilliant combination. They can be competition as well, but to me, it's a bit like they will only be serious competition if we allow that to happen. We are the ones who have the customer relationships. We are the ones who have all the customer data. We are the ones who have the trust built up with customers. We are the ones who understand regulation and compliance with regulations. We work with the regulators. If we allow fintechs to sort of take our customers away from us, despite all of these advantages that we have, then we only have ourselves to blame. So to me, this is a story about partnerships, much more than about competition. And competition, that side of it, only pushes us to become better.
Okay, so now I'm going to pivot into a conversation and talk a little bit about the open banking, open finance stuff which is coming. I think globally, for me, I've not been impressed as much as open banking has achieved. Right? I had greater expectations, right? Obviously, for a number of reasons, whether they were regulatory, whether the banks weren't ready, the technology didn't allow it. Some of the fintechs didn't do themselves any favors by creating all kinds of compliant issues. It didn't take off. We obviously have quite an ambitious agenda here, which has been driven by the central bank, right? So one of the things which will come out of open finance is greater collaboration between financial institutions. Doesn't matter old, new, right? Which I personally think will fuel growth within the financial, within the sort of the new fintechs, if you might say so, right? They might become extensions of your arms on the distribution side, might become product providers, might actually provide infrastructure. The point I'm trying to make here is that you are going to be helping create a lot of value, right? Because at the end of the day, this is all creating the value. We've seen a number of banks go down the CVC route, right? Not very successfully just yet in the region. I don't think there is one which can say that we've hit the ball out of the park, like a Citi or some of the other JPs and so on and so forth globally. What's your view in terms of CVC here? Do you really think we have a big enough market to actually have a CVC play and our fintechs can actually create that much more incremental value? Or would you rather just say, something CVC is not for me? Or actually banks shouldn't meddle in it because it's a completely different skill set?
CVC as in?
A corporate venture capital.
It's a very good question. I'm probably going to give you my personal opinion more than that of the bank per se. I think it's very hard for banks to get this right, despite the fact that we're close to the functionality, we're close to the technology, we're close to what these companies try to achieve. It's still very hard to get it right. And to me, most of the banks, perhaps other than the ones you mentioned, the Citi or a JP Morgan, most of the banks do not have the scale or the size to really make a very large set of well-diversified bets. And that to me is absolutely required. Because today, you and I may think that company A will do extremely well, and we may be completely wrong. And in 2 years from now, company A has disappeared, and company B is the one that's leading the field in that. So you need a certain size, a certain scale, certain risk appetite, although I think that's probably the easiest of the three, to make a set of bets that's sufficiently well diversified for this to work. I don't think, that there are banks big enough in the region, but there's not too many of them.
No, I totally agree, and I'll go on record, both wearing my personal hat and the advisory hat I wear, which is, as you said, there just isn't enough scale with a number of banks to actually make strategic investments. And if purely they want to play the CVC arm from a financial perspective, they're better off parking that money with venture capitalists who do a much better job and create value for the shareholders from that perspective. Because, as you said, you might want to invest in a company that might be not in your region with a view of bringing them into the region. And I think VCs are much better at doing that than a bank. And I think with a couple of banks, we're just not large enough. But it's quite interesting. It has become a bit of a flavor of the year among a number of banks who have actually sprung out CVCs. Do you have a same view in terms of venture building?
I want to go back to this venture capitalist because it's interesting what you said. I spoke to one of them, I think it's about a year ago, and he was managing a portfolio of fintechs. Very interesting, largely AI based, as you would expect these days, but a large portfolio. And I asked him, okay, what are you look at to determine a winner? He said, I've been doing this for 20 years. I have absolutely no clue. He said the only way to do this right is if you have a portfolio that is large enough to have enough bets that are well diversified. And then, I don't need to tell you, you know this better than I, but then you will have 2 or 3 that make up for the other 97 that don't make you any money. So that's why I 100% agree with you. For most banks, that if you want to play this game, then that's the way to do it. And don't try to do something yourself that other people are much better at. Venture building within the bank, you mean?
Yes.
Yeah, that is something that could work. And that to me is also not different from venture building in any industry, to be honest. It may be that certain functions become sufficiently large in their own right or sufficiently important or move away too much from the core of the bank that it makes sense to establish them as a separate venture. That's definitely something that I believe in. And that's something that banks have been quite successful as well in the region.
No, they have been. Let me take that conversation. Let's talk about AI. If I'm not wrong, you actually have a PhD in AI.
Yeah, as I said to my kids, my PhD will be 30 years old next year. Yeah, we'll have its 30th anniversary. So don't build up your hopes too high on that.
But at least you get the basics of. Most of us are reading one document and believing we're experts at it right now.
Because what's interesting about it, you mentioned basics, and that's exactly what it is. When I look at things today, the fundamentals essentially haven't changed at all since I was doing this back in the early 90s. What has changed is the massive computing power, the digitization of data and the digital access to data, which sort of all the things that we could only dream of in those days suddenly became reality. That has been the biggest change over the last couple of years.
I totally agree, and I think that's me totally. Having said that, it's consuming the banking sector, the financial services sector. I'm sure it's a boardroom discussion every time you have a board meeting. I'm sure it's a management discussion, right? Having said that, there's a flip side to that story also, which is the vast majority of AI investments by banks are nowhere near delivering the ROI that was expected, right? So I guess I've got twofold questions for you. One, as a CEO who actually also understands AI, what has been your approach, or what is your sort of recommended approach to the banks in terms of how they should look at AI today? And B, I'll make it a 3-part question so you can have a single go. B, where do you really see in the near term AI making a fundamental difference? And the third question is, what is that actually driving in terms of governance changes that you're having to bring about in your business to be able to cope up with something which, to be honest with you, is changing so quickly that we don't even know? Yeah. Right? So sorry, I've loaded 3 questions in one, but that gives you...
Yeah, and I'm going to answer one that you didn't ask. I think on the ROI, the answer should be not yet. Because I'm convinced it will happen. But you're right, I 100% agree, it's not yet. We don't see the return on investments today, but they will.
Stick on it. Keep going. Yep.
It's going to happen. In my view, AI will fundamentally change every business, every sector that we have. and it will change those sectors first that deal with data, and especially those that exclusively deal with data, right? If you look at a car manufacturer, it builds a car. The processes will change, the way the car will build will be changed. Perhaps it's an EV car rather than another one, combustion engine, but it's still a car. We only deal with data. Essentially, banks today, we only deal with data. No, there's a little bit of cash perhaps here and there, but other than that, there's no physical product. So changing our way of working is much easier, and it will go much deeper than for many other industries. And we will be the first to change. We see some of it today. We see it in things like pattern recognition, whether it's in transaction monitoring or whether it's in sort of marketing of one. Essentially, the pattern recognition and the role that AI can play in that will massively change the way we work. We see it in the way that we use Copilot to increase productivity of our staff. And it's the things that everybody is doing, like the minutes of meetings and emails and documents, but it's also helping our relationship managers to ask better questions. Mm-hmm. Yeah? You can almost ask Copilot, if you are a relationship manager for this company, what kind of questions would you ask? Or perhaps even more important, what kind of questions do you think the chief credit officer will ask? Yeah, that's another way that we use it. We have seen it impact and improve our productivity already.
Okay.
And I only expect this to go up exponentially in the years to come. There's more to come here.
Okay. What are you doing differently in terms of adjusting the governance in the way the bank runs?
It's a good question. So the governance is extremely important because it's a fantastic technology. It's more than a technology. It's a fantastic way to change the way we work, but it's not perfect. And we have to make sure that we keep our security in place, that we keep our checks and balances in place, and that we, perhaps not fully, because you alluded to that in your question as well, I don't think we will ever have fully explainable AI, or if we move to explainable AI, that we sort of limit the upside too much. That I see as the biggest risk. So that you will have to accept that there may be things happening that you cannot fully explain, but are still the right thing to do for the customer and for ourselves. But you have to put your guardrails around it. And in that sense, you're absolutely right. Governance has changed already and will change more over the years.
Okay, so here's the $1 billion, $1 trillion question, whatever dollar you want to put, which is the human implications on AI. And I'm going to morph this into a little bit of a bigger human question. So you have AI, which is driving productivity of employees. There is AI, which is creating tremendous fear of job and job loss or job change among people. We're also, I guess, in the middle of the largest, mental health crisis that we might be experiencing for whatever reason, whether it's post-COVID or I'm not a doctor, but we are experiencing. I know you guys are doing something currently at the Kite Beach where you have a clinic or a center, and I'd love you to weave in. So as a leader of men and women in an organization, how are you taking all of this in at the same time and saying, this is my people agenda?
I think you have to start by understanding the fears, because the fears are real. I don't think what people are afraid of is real, but the fears are real. And that, I think that the starting point is you acknowledge that. Jobs will change, period. Some jobs may be eliminated, all jobs will change, and people have to adjust to that. And we as an organization have to make sure that people can. That's why we invest in data literacy and AI literacy and our digital accelerator and all the other things we offer our colleagues. Because it is very important that you keep on moving. AI will change the nature of jobs, has changed it already, will continue to change it. But if we use it in the right way, it will take out the elements of the job or the aspects of a job that were the least attractive in the first place. If you can take out routine stuff or boring stuff, it should make jobs more interesting. If you can help a relationship manager to write a better proposal because you help him to ask the right question, it will be good for everybody. It will be good for the RM, it will be good for the guys in credit, but it will also be good for the customer because he may get a swifter response from the bank. So the nature of jobs will change, and people have to make sure that they can change with it. But I don't think it will lead to a mass elimination of jobs. That's definitely not the agenda that we are looking at. Having said all of this, you're absolutely right to focus on well-being and well-being of our staff. We're very happy to be part of the Dubai agenda, month of November, the 30 by 30 agenda. We have a booth on Kite Beach. Given how fit you are, hope to see you there one of these days. I'm sure you will do well. But this is part of it as well. Joking aside, it's really important that you offer both.
Okay. Doctor, I'm going to put you on the spot a little bit that. As a CEO, I'm sure you mentor people, right? I come to you and I say, I have fear of AI, right? What's your advice to me? What should I do to overcome that fear?
Well, first of all, acknowledge that your fear is real. Then I will try to explain to you that you should see AI. I think the word that Microsoft used is absolutely brilliant. It's a co-pilot. It's not a pilot. It's not somebody who will take the seat of the pilot, but it's somebody who will help the pilot to do a better job. And you're the pilot. So you use AI as your co-pilot. You use AI to become better at the things that you do, to become faster at the things that you do, to deliver a higher quality. But it's up to you to make sure that you're able to do so. We will give you the tools. We will give you the tools to learn, to understand, to train yourself in this, but you have to make sure that you're able to do so. And once you do so, hopefully it will also help you to regain this sense of control that will make you less anxious about all of this. Because remember, in the end, it's a co-pilot, and you continue to be the pilot.
Okay. So let me circle back. I'm cognizant of time, so I'm going to circle back to the customer. Here's a hypothesis, and I'm sure, well, I'm not sure. I'm sure you might, or I think you will disagree with me on this, but let me share my sort of hypothesis, right? So I see a very interesting convergence between open finance, which in my simple terms is accessible to richer data at the point of need, or not even at the point of need. On the other hand, we're actually seeing the advent of agentic now coming on, which is sort of my co-pilot. So my agent is my co, or a virtual representation of mine, but more perfect in its form, in the way they make decisions, right? So more data, agentic becomes arguably more influential in terms of the way they choose, they select, they negotiate, they decide on my part. So that's one thought. Here's my hypothesis. A lot of the so-called trust that banks actually talk about among customers, there's an element of fear in it. It is fear-led trust, because the view we've always grown up with, and at least I can tell in my generation, was stay with the big banks. That's where you put the money. Your money stays safe. You know, these new kids on the box could worry you, right? Doesn't matter if they don't treat you well, at least your money is safe. So there's a bit of fear. Agents typically don't factor fear, right? They may try to make the perfect decision. There is no perfect decision. What happens to the trust factor, right, as agents become more and more common, right? Because you'll have an agent in the bank side talking to my agent, both perfect devices. Do we start seeing a seismic shift in trust? Apologies, I know it's a very complex question.
No, it's a brilliant question. I think perhaps I disagree with you on the part of fear. You said agents know no fear, and of course you're right on that, but the fear will be translated into something else. Your agent will have the assignment to come with the best possible solution for Arjun. Yeah? And that best possible solution may not be the bank that provides the best possible interest on your deposit, right? Mm. It may be the bank that provides the second or the third best possible interest on your deposit, but where your money is safer. Yeah? And that in itself, don't call it fear, but call it for ensuring acceptable levels of safety, if you want. That, I think, will continue to be a factor. No, that has to be a factor in decision making. it's long ago now, and I sound like my grandfather, but the global financial crisis 17 years ago, if it showed us one thing, it is that banks can go under, and that certain banks go under before other banks do. So there is an element of safety that people have to take into account, that their agents have to take into account when they take decisions on behalf of the people, of their owners, if you want, when making this kind of decisions. So to me, the part that I disagree, fear is not the right word, but it's sort of ensuring adequate levels of safety is absolutely crucial, and that will continue to be crucial in my opinion.
Fair enough.
And that's where the trust factor comes in, right? Because it's sort of the trust I have in my bank is the belief or the knowledge that I have that my bank affairs, my money is safe with that bank. Yeah, it's not necessarily the fear that I have that I could lose my money, but it's more, phrase it positive. It's the certainty or the near certainty that I have that my money is safe.
So can I ask a quick question on this trust? And maybe there is no right answer, but very, very quickly. So 2 years ago at Singapore Fintech Festival, I ran a roundtable where I had 12 CEOs of digital banks across the world, right? And it was a very, very interesting discussion. And I was trying to be a naughty boy by asking all the hard, all the tricky questions. And one of the universal things that came around, the roundtable was called "Why Digital Banks Fail." I think it was an emotive term because the point was not about them failing. Why was it taking them so much time to get to profitability, right? And a lot of people use it takes time to build trust, right? And with trust comes the larger deposits, the more the dealings, and therefore the banks make more money. Banks have been funded by VCs, which is impatient capital, ta-da. 2 years later, we now have so many digital banks which are profitable. So there's one report which said that 60 of the top 100 or 60 of the top 200 digital banks now are profitable, right? Has something changed in the last 24 months where trust accelerated?
That's a question I should ask you rather than you asking me. So I can only hypothesize on this. I think it will have helped if you have a successful track record as a digital bank. Yeah. That's sort of the simplistic answer. It's interesting. I now and then watch the Dutch TV, and if you see advertisements for the neobanks, for the digital banks, they're always very careful to put in that your bank deposits will fall under the deposit insurance scheme that we have in the Netherlands. So the moment that you have an insurance scheme, then perhaps trust becomes a little bit less relevant, if you know what I mean. But no, I cannot think of any external event that would have changed this.
My hypothesis is this, Dr. Bernd. And again, I haven't gone and done an exhaustive analysis, but I write a lot, so I read a lot. What I've actually seen in the last 24 to 36 months is the number of central banks who have actually come up with digital banking regulations and digital banking licenses. And I think that itself has had some sort of a halo effect, which has told the customers that, by the way, this business model now is there to stay, right? So the ones who have been around have sort of stood the test of time and obviously played a role in influencing, right? So whether you take even in our market, right, whether you take Saudi Arabia, right, whether you take even a country like Oman, you take emerging markets like Philippines, Hong Kong. Hong Kong's not emerging, but in the sense, the number of, I think, regulators who have legitimately said this is a business model by itself, I think has had an effect which 3 years ago was lacking. I think 3 years ago, a lot of these guys were neobanks. They were actually banks without charters. They were mostly distribution capabilities. There were a few mess-ups, so on and so forth. And I think that legitimization, because I can't think of anything else which has happened in the last 24 months.
This one is definitely true. Yeah. I think the fact that they're regulated and that they have to comply with the same regulations that any bank has, this has definitely played a role. Perhaps, I think it was your first question, perhaps the fact that these digital banks now see themselves as digital first, the fact that the non-digital banks or the conventional banks are essentially digital first banks as well, perhaps that has sort of led to a convergence as well, right? Because if I'm as CBD, I'm a digital first bank, able to provide all of my banking services digitally, but still have a a network of high-quality branches accessible to people, and you take a digital bank that has opened its first or a second or its third branch in addition to providing a fully digital service, what's the difference between the two? So that may have increased trust in those digital banks as well.
I'm cognizant of time. Two quick questions. One, which I forgot to ask you earlier, but I have to ask, and then my last question. As you move to a digital-first bank and you bring in, AI, and we didn't really get a chance to talk about digital assets, but that's fine, so on and so forth, right? Here's another hypothesis, and I wrote a two-part article on this. Last year, I actually wrote an article said Fintech is dead, long live Fintech, and the argument was that Fintech is no more about scrappy B2C players. They're now actually getting into the world of providing corporate banking solutions. They're providing infrastructure and so on and so forth. This year, I've gone a bit further and I said, Fintech is the future of the operating system of banking and financial services, which basically means they're going to start doing the utterly boring stuff utterly well, which is what we really want, where we want Fintech to go, right? Has your perspective as a bank changed towards your service providers? And do you see a much bigger gamut of providers now than you historically saw? Because even today, if you see the banking landscape, the core banking providers and majority of the infrastructure players are still a handful, right? Are you starting to see that change?
Yeah, I think it changed a couple of years ago already, to be honest. And we've been very open-minded about working with a much wider range of partners, including fintechs that were really startups when we worked with them. I'm not sure if I agree with you that we want fintechs to do the boring banking work really, really well. I think we want banks to partner with fintechs to do the boring banking work really well.
That's what I meant.
And that's where they have a massive role to play, because they do help us. The way that they work, the technology that they're able to use, and the way that they're able to use that technology actually makes us better banks.
Agreed. Last question, sir. We're coming to the end of the year, right? What's your sort of view on 2026? What is it that we should look at? How should we look at the last sort of 3 to 5 years of banking? And what do you think is the next 3 to 5 years?
Let me ask the easy question first. Let me answer that first. So financially, the banks will continue to do well. The economy in the region, the strength of the regulators, the very supportive and wise decisions taken by the governments across the region will ensure that next year will be a good year again for all of the banks. So that's sort of the easy answer. When I look back over the past 5 years, which sort of started with COVID, I think the digitization, the mobile first, the default digital, the requirement for banks, the necessity to provide all of their service digitally, that probably was the story of the past 5 years. And if you look back at the last, 2-3 years of that 5 years have been data and AI. And you have to combine them as well, because one of the big challenges at any bank I've worked at and any other bank in the world as well is to make sure that your data is of the right quality and is accessible in the right way to make it useful for artificial intelligence. To me, the next 5 years, AI will continue to play an ever more important and an ever bigger role. That's one thing that we're going to see. The main focus for those banks that will win in this market will continue to be customer experience as the only possible competitive advantage. And those that win will be able to make use of AI and of every other digital technology in such a way that the experience that they deliver, the processes that they're able to set up in the bank to deliver a customer experience that's absolutely flawless, frictionless, that is error-free, and that is extremely fast. And that, to me, will be the story of the next 5 years.
I agree. So customer service is the North Star, and the bank's ability to harness the available, I guess, technology, whether it's AI or otherwise, is basically, I guess, the greatest enabler.
I couldn't have said it better.
No, I tried. I try.
Thank
you, Dr. Bernd. Thanks a lot for making time and seeing me this afternoon on a Friday. I appreciate your time.
My pleasure. Let's not wait another 4 years.
Thank you, sir.
Thank you.
Ladies and gentlemen, that was Dr. Bernd van Linder, who is the CEO of Commercial Bank of Dubai. You heard it from him. And I can actually tell you, I have clear memories from 4 years ago where he was very, very strong about the concept of customer service. Then he's still is sticking to the mantra of customer service, which I do think is the number one objective. I'm sure there are so many questions we weren't able to cover, but I'm cognizant of his time. He also needs to get back to work. And with that, I'll say goodbye till next week. Thank you.